I have inflation-protected bond fund, the C70, and
Yes.
that's down about 3%. And I'm trying to understand why that's down. I would have expected it to, in a period of higher inflation, to at least stay stable or go up. But could you help me on my understanding of that?
So that one is more so than the stock price itself is driven in a time like this by to distribution of your yield. So let's say you're down 3%. Well, the yield's over 4, so you're really up. You're not down, but we always leave that part out, unfortunately, when we look. It's kind of a human nature thing. So you're not down quite. You're down less than what it is going to pay you in distribution yield. So that's a good thing. It's a good place to be. That's the idea of this. So what happens is the value on this is going down a bit because the yield is driving up so much that it is causing a little bit of a downtick. It's not because of selling like a stock would be. That there's nothing else out there better than this, and it's not likely they're selling. But it could be too, and one of the biggest problems could be with these inflation-protected bond funds is some of their positions are either maturing or they're selling out. So, for instance, they might have U.S. Treasury notes that are old. I'm looking at one on that particular inflation-protected bond fund that has a Treasury note that is paying about close to 1%. Now, that is a relatively old bond. They're short term, so it's probably ready to mature. When that matures, it's going to have an impact on the bond, on the portfolio, on the bond fund itself, and that's it's just the way those things go. So, but all in all, when you look at the years, 12-month annualized return or a 3-month or 3-year annualized return or whatever, you see the returns are really good. And you will get to a place by the end of this year, in all likelihood, that it's going to have to go down really significantly, which is not likely to do, for you to be down in the fund, because you will have been paid, a number. I have an inflation protected bond fund. As a matter of fact, I have a Ginnie Mae fund that still isn't negative yet. Everybody else's is negative, but it's so old. I've had so much dividend in it that it's really hard to do. So I wouldn't be concerned about it. They do act a little bit different. If things get any worse in the next week, you'll see that they will come screaming up because the buying will outweigh any of the maturing of any of their bonds. Hey, remember to click the subscribe button right here on the screen. And don't forget to hit the notification bell so you'll be notified when new content is added. And more importantly than anything, you don't want to miss all 3 live hours of Financial Issues every day from 9 to noon. And you can watch it on FISM.TV. That's FISM.TV.